Crystal, we're not here this week, but we're still bringing the heat.
Yes, we are. Call us Miami because we're bringing the heat. I had to be corny.
Welcome to Crystal Hammond, everybody. It's the Crystal and Joe Show.
Yes, welcome. So we're going to go back. We're going to rewind. We're going to go back in time.
All the way back. Almost all the way back.
Yeah, almost a year. And we're going to replay for you Real Estate Gold. This one is 5 strategies for low-cost second home and investment property purchases. This is an old one because it's me and Alan, and we are interviewing. Our special guest was Jasmine Krnjetin, and she is actually a mortgage person. So she's a good person to know, a mortgage broker. And you want to listen to that person because they're giving you the money. They're really saying yes or no.
Which is specifically why we want to play it. We are bringing somebody on for a more comprehensive view than this. It's a very short episode while we're away. So we're going to dive in deeper. But man, before we get there, even though this is a year old, it's all great information. Of course, you get to hear the Alan Corey again, riding around in the car with us. We miss Alan, but it's a good time. So Crystal, we got to get back to whatever it is that we were doing. What were you doing on your week off?
I was, I took extra swim lessons.
You were bringing the heat.
Yeah, right. That's why I was in the pool because it was
exactly
so hot.
It. All right. Everybody's like, when you get into it, here you go. Let's Crystal hit play.
Live from the back of Ruth the Realtor's car, it's the Stacking Deed Show. I'm Ruth's neighbor and part-time mechanic, Neighbor Doug, broadcasting live from the spacious, luxurious trunk recording studio. Welcome back to a ride through the wonderful world of real estate investing. Today, our hosts Alan and Crystal will share their 5 different strategies of buying a second home. It's not as hard as you think. In our headlines, we discuss avoiding common pitfalls in second home purchases. Plus, we'll answer a question during Ring Ruth's Rotary from a lucky listener. And then I'll share some jaw-dropping trivia. And now, 2 hosts and my carpool mates who pretend like they don't know they owe me tons of money in tolls. It's Alan Corey and Crystal Hammond.
Wait, so Doug just said we owe him money, but we've been giving Ruth our toll money. So he definitely failed at Effective Communication Month.
Yeah, well, it is June, which is Effective Communication Month. So we got to coordinate this. So we got to keep Ruth on the road here and making sure the money's going to the right place. But yeah, hey, I'm Alan Corey at Real Estate Maxi on Twitter because I'm a real estate maximalist. And sitting next to me is Condo Crystal on Twitter, Crystal Hammond. How are you doing?
I'm wonderful. How's everyone today? We have a wonderful show.
I think it's going to be fun today because we're going to cover second home purchases. Do you want to buy a second home or maybe that second investment property, how to go about it? But that might sound a little bit too much for you. So don't worry. At the end, we're also going to cover how to buy your first home with just $5,000 or maybe even less. Yeah. So we're going to cover the whole spectrum of buying your first or second home in different budgets. So this will be a variety show of sorts.
Our usual variety show of sorts, but it's a variety show with lots and lots of very useful, practical steps and information, like very useful information. So sit back, relax, and enjoy the ride.
One special guest with us actually in the back seat that I also want to introduce, Jasmine Krnjetin of JasmineMortgageTeam.com. She's been on the show before. Welcome back, Jasmine. Thanks for joining us.
Thank you for having me. Always fun. I love chatting with you guys and learning from you and maybe offering a couple words of wisdom here and there.
Well, Jasmine knows everything about mortgages, so we love having her on.
Yeah, our go-to mortgage advisor. And so I wanted to talk second mortgages with you because that's our headlines today.
Hello, chaps. And now our Stacking Deeds headlines. Cheerio and pip pip.
First article we have here is from Casey Farmer of Mansion Global, where she mentions that the demand for second homes in the U.S. is down more than 50% from pre-pandemic levels. Are you seeing this, Jasmine, on your end? Are mortgage applications down 50%?
I think that's an accurate statement. I think that second home purchases have or seem to have slowed down in the last couple of years. More specifically, I would say in the last year. The reason for that would probably be, from my perspective, is some of the loan level pricing adjustment changes that kicked in for conventional mortgages beginning mid of last year, where conventional loan rates for vacation homes or for second homes are now, give or take, just about the same as investment home purchases.
So traditionally, that has not been the case.
Yeah, traditionally, primary residence and second homes or vacation homes had the same interest rates. So the advantage was always that you always had to put a little bit more down for a second home than primary. It was always 10% down, which is still true. You could get a vacation home with 10% down, but the interest rates were the same as primary mortgage rates, versus now interest rates are, about 1% higher than conventional primary home rates, which is pretty much up at, on par with where investment homes are. And so I think that the reason we have seen so much less activity in vacation home, dare I say, because a lot of people knowingly or unknowingly do commit occupancy fraud. Dare we say the F word? Fraud. Yeah, that is actually, funny enough, that is like the highest type of fraud committed in mortgages, believe it or not, is occupancy fraud. People saying that they're going to occupy property when they're not. And FBI investigates mortgage fraud, y'all. So it's a serious, serious thing.
So if I'm hearing you correctly, this is what you're saying, that it used to be that the terms for a second mortgage required a lower down payment and it came with a lower interest rate. And you had to pretend like this was going to be your second home that you were going to use, as a vacation home. And you might rent it on the side. Wink, wink, nudge, nudge. It's really a full-time rental. That's the occupancy fraud.
That is the occupancy fraud part of it. Yes. Because if you know that you are buying a home that you are going to be renting out, then it's a money-making business situation. And then you need to buy it as an investment property. So that's why I like to use the term vacation home more so than second home, because I feel like sometimes people don't understand, a lot of people just understand the second home as literally, this is not your first house, this is your second house, right? But second home really means vacation home. And so some of the specifics that underwriters will look for to validate that you are buying a vacation home is that it needs to be in a vacation spot. So is it near a lake? Is it on the beach? Is it in the mountains? If I have a home in Atlanta, I cannot have a second home in Atlanta as well, right? I can have a vacation home or a second home at the lake an hour and a half outside of Atlanta or down in St. Pete in Florida, but I cannot have a vacation home 3 doors down just because it's the second home I'm purchasing, right? So that I just want to make sure that everybody's kind of clear on what is considered a vacation home and what that type of mortgage is for.
That definitely makes sense, because it is highly unlikely that my vacation home is 2 blocks from my primary home. So then if vacation homes are normally a lower down payment, and maybe that's why people do commit occupancy fraud. I never heard that term before. So then what are the terms for buying your first investment property, which would most likely be that second home?
Yeah. So just a couple things to mention. So if you're buying a vacation home, you're going to have a 10% down payment. You cannot use rental income to qualify to purchase that home, meaning that your basic income has to carry the weight of that entire mortgage payment. And the interest rates are going to be higher than primary. On the other side, if you're buying an investment property that you're going to short-term rental, whatever you're going to do, you're going to rent it out one way or another, the minimum down payment is 15%. However, you can use the rental income to help offset your debt to income ratio. Thus, that rental income is going to help you carry the weight of that payment. So slightly higher down payment, you can use rental income, and interest rates are higher than primary rates by about 1%.
To break that down to our audience, what you're saying is, let's say you're looking at that first investment property, which is going to be a second home, but it's not a vacation home. And the mortgage payment is $2,000 a month. If you can show, an appraiser shows that it could rent for $2,500 a month, that shows you as a mortgage lender that the house can pay for itself. And it's fairly easy to get approved for that sort of mortgage.
Yeah. I mean, you still have, it's still for traditional mortgages, it's still, you have income credit and assets to qualify for the mortgage, right? But yes, that is, so if your debt to income ratio can really just carry your primary home mortgage, right? And then the next home is going to be offset by that rental income. There is many different types of loan programs out there. Once you step into that whole, like I'm an investor zone, right? You can do bank statement loans, you can do debt service DSCR loans, which basically the debt service is covering the mortgage payment. And there's all kinds of creative things once you step into like, I'm full on investor, I'm getting an investor mortgage. There is all kinds of interesting things, even outside of just the traditional conforming conventional loans that we can play with.
Well, back to this piece by Casey Farmer. She says, now's a good time to make offers because there's fewer buyers right now. And maybe if you're a cash buyer for the second home or these vacation homes, it's sort of a depressed market. You might be able to get a deal and you're not going to get in a bidding war, which was what we were seeing 2 or 3 years ago, maybe even 12 months ago. Which leads me into the second article we found here, this piece by Mia Taylor on Bankrate, where she says, should you buy a second home? And she gives 6 considerations before owning a second home. And before we get into this, Crystal, have you ever considered a second home or a vacation home?
Well, yes, definitely. I had to move. So that kind of forced my hand at having a second home. So I was actually going to live in that home and I didn't give up my primary home. That was how I got into my second home. It picked me instead of me picking it.
No, I love that sort of just.
I like that. I like that a lot.
Yeah, that breadcrumb trail of primary residences, and you just keep it and hold it as a rental. For me, a vacation home, it sounds awesome, but I'm the type of guy who wants to go a different location for every vacation. And so I don't want to go back to the same home. And I know if I have my own vacation home, when I am on vacation there, I'm going to be doing home repairs and fixing things up, and I won't ever be able to relax. But that's my personal preference. I do love it when my friends have a vacation home and they invite me along, no doubt. But what Mia says in this article is that you really have to consider the financing options, which we've discussed. But she also mentions your ability to travel to other destinations. Do you want to get stuck vacationing in one place for the long term over and over again? Where do you guys stand on this?
Well, they say nowadays they call it revenge traveling. So people are really traveling a lot more than they were during the pandemic when, they were stuck at home, stuck teleworking. So now that the telework age is over, people are ready to be back out and about. So I feel like even for you, Alan, like I think it should be easier to do maybe like housing swaps. Like if you're tired of vacationing, you can say, hey, by the way, I have a home by this lake at this place. You can find 12 friends with possibly vacation homes at other lakes. So I feel like that maybe shouldn't be a deterrent because of the whole house swapping and Verbo and Airbnb. Those are options.
Yeah. I grew up in Europe, so it was very typical to have like a weekend home, right? So not necessarily like a vacation home that it's going to be like a 6-hour drive or a flight, but it's like something that you can go to on the weekends. That's either up in the mountains or near a lake. So that's my preference because I want to be able to drive to it very quickly and just get away from the city. So that's where I stand on the second vacation home. Like I have a little cottage on a lake about an hour away from here, and I love getting away from the city on the weekends. The nice thing that I like about being able to get away on the weekends is that when I'm at home on the weekends, I'm like doing laundry and meal prepping and all that kind of crap. While I'm at the lake, it's just like, well, let's play cards. Let's read a book. Let's just hang out and have fun.
Housework is not staring back at you.
Yeah. So that's what I like about vacation homes. That's my speed.
One more thing I noticed in this article that they mentioned, and I think this is funny. I know this is something that you would disagree with. Well, one thing they say, consider the full financial impact. And so, of course, Alan always says, do the math. The math will let you know if this is a great decision or not. but they were saying things to consider. They're like, are you saving at least 15% of your current income for retirement? That's a good thing. Do you have 6 months of, expenses for emergency fund? Yep, that's a good thing. Are you out of credit card debt? I believe we all can agree that yes, that's a step. But then the one I think Alan would hate is your current home paid off? And I know you discourage that, and tell the fans why you discourage paying off your first home.
Yeah, well, my analogy for that is, if I find $1 on the ground right now, I can take that dollar, walk into a gas station and buy $1 worth of candy, or I can mail in that dollar and pay off $1 of my principal balance on my mortgage. Now, if I fast forward, 10 years and I don't pick up that dollar, but 10 years later, that dollar is still there, I pick it up. I now have the exact same two options. I can walk into the gas station and buy half a bag of candy, because candy's now $2, right? Because of inflation. However, I can still use that dollar to pay off a full dollar on my mortgage in the future, right? And my mortgage balance. So that is the best inflation hedge, is that fixed 30-year mortgage that you have, where it's just going to feel like it's getting cheaper and cheaper and half price over time. And that's such a huge benefit. I don't want to pay that off. And the second thing is, your home, you get so many tax breaks for having a mortgage, and you can write off the mortgage interest and all sorts of things. So why would you also want to get rid of that second benefit from having a mortgage? And lastly, not only do I don't want to pay off my mortgage, I love tapping in the extra equity that may be in your primary to get a home equity line of credit to use as a down payment on that second property, whether it's a vacation home or a rental property. So if you do that, and I've done this many times, I'm basically buying my second property 100% financed. The down payment comes from a home equity line of credit or a home equity line off the equity. That's my 20% down payment. And then I get a mortgage for the 80% that makes it 100% financing. And I would do that all day, as long as I can still rent it out and the cash flow covers both mortgages. Jasmine, is that something you would recommend or see quite often, or am I in the crazy camp here?
I agree with Dave Ramsey on a lot of things, but we do not agree on paying off mortgages. I get it. I mean, I get the idea of not having a mortgage, and that there is a certain quality of tranquility that maybe you will feel. Mm-hmm. But I think it's a mind game. Like, you can feel good knowing that you're going to be able to pay your mortgage, or you can feel good knowing that you don't have a mortgage. I feel like it's a mind shift one way or another. And I'm definitely with you, Alan, on I never feel that mortgage debt is a bad idea. If you think about it, let's say that the property values really go down, right? That's like the worst case scenario, right? You bought a $100,000 home and now it's worth $80,000. Guess what? Your mortgage payment is $753 mm-hmm. per month. Like, no matter what the value of that home is, if you have a 30-year fixed mortgage, nothing happens, right? The values can go down, the values can go up. You still have a roof over your head and a fixed mortgage payment. So yeah, I'm with you, Alan, totally.
And I feel like also Alan's way, like when you're using your home equity to pay for your next home, I feel like that opens the door for, more money you can use to get the next house. And there's less, I guess, occupancy fraud. Like, what am I trying to say? I'm trying to say, like, there's less hoops you have to jump through when you have your down payment, as opposed to trying to like come up and scramble with different programs to see that you qualify for.
Mm-hmm. Mm-hmm. Yeah, because then you have that down payment, and then you're leveraging the equity, which, I think is the big piece. Like, I had a client just recently where she bought a home for about $280,000, give or take, a couple years ago. Meanwhile, she accumulated about $100,000 worth of debt. She was out of work and she had a lot of debt. And so she called me and she's like, hey, the value of my home has really increased. Should I do a cash out refi? But also, by the way, my kids need to get into a better school zone, right? And so the way she leveraged the equity in her home is that she sold her house for like $450,000. Nice. She paid off her debt with the proceeds, and she still had a 20% down payment on the next home, and she got into a better school zone, and she got into a slightly more expensive home, but her monthly expenses went way, way down because she paid off $100,000 worth of debt. And I was like, had she not bought that $280,000 home a couple of years ago, she would just have a whole lot of debt.
That's pretty huge. That's pretty huge to unpack. So
Mhm.
that's life-saving for her. That's life-changing.
Yeah, exactly. That's a lot. And if you think about it, like, oh my God, somebody has $100,000 worth of debt, that's actually not that crazy, because you see people all the time. I mean, people are buying cars right now that cost like $30,000, $40,000 for a car, and it's not that unusual to have $40,000, $50,000 worth of student loan debt. And
Yeah.
you can have that kind of debt before you're 25 in a blink of an eye, and you're starting off your life in like absolute negative, negative equity. So if you have a home that at least is appreciating, you can leverage that and, use that to buy other wealth creating investments.
Yeah.
And I feel like that's why a lot of people tend to stay put, because they're like, oh no, I don't want to, if my home has appreciated, I don't want to move, because where am I going to move to?
Mhm.
Housing prices are up and I can't afford it. But you just proven that, hey, just from selling that house, she was not only able to pay off all of that debt that she had. So there you go. That freed up a lot of disposable income for her. Then
Mhm.
she also had enough left over to make a sizable down payment on that next bigger home. And then, her children are in a better school district. That's like real estate. That's like a triple win or quadruple
Yeah,
win.
exactly. I was like, that's amazing.
And sort of that concept, sorry for the self plug, but I wrote a book called House Fire, which sort of is the same sort of thing about burning up your bills, where
Yeah.
I coach and teach and instruct, hey, don't pay off that $40,000 car note, right? Instead, take your $20,000 and buy a house, a rental house that cash flows $200, $300 that will cover your car note. And then what happens in 7 years, your car note's paid off. So you still have your car. You kept your $20,000, but that $20,000 turned into $40,000 through equity. And then you still have that cash flow that was going to your car note that you can go to another bill. That's so much better than just taking your money, handing it over to a car dealership. Why don't you keep your money and put it to work so that it's paying off your debts for you?
I love that. I love that so much. Yeah, because I think that there is a lot of people that are in some of the FI movement, right? Where the idea is just to like reduce your expenses as much as humanly possible so that you can save as much as you can. Which I agree with. I think that's good, but I feel like your book kind of takes it to the next level where it's not just about, saving, money at the grocery store or whatever and saving every penny, but it's really just about like investing that and creating some leveraging really real estate into helping you retire early.
And I feel like we all are we're spenders. So let's talk about how we earn the money, that's easy to spend, like if you have the car payment, like just like Alan said, have a house that's paying that car payment for you.
Yeah, I love that. That's brilliant.
We'll put both of these articles in our show notes. If you want to subscribe to those, go to stackingdeeds.net/show notes. If you want a free mortgage consultation from our mortgage queen, Jasmine Krnjetin, how can they reach out to you, Jasmine?
You can follow us on Instagram. It's at Jasmine Mortgage Team, or you can hop on our website, jasminemortgageteam.com, and you can schedule a time to chat with me. I have my calendar posted on there. You can fill out a quick pre-qual if you want to get pre-approved, and we are always available to help you think through and come up with a game plan, whether it's to buy something, in 3 months, 6 months, or 2 years. We're happy to help you and make a plan for you.
Well, thank you very much for joining us, Jasmine. Up next, we will answer a question during our Ring Ruth's Rotary. But first, Doug has our property pop quiz.
Hey there, Deeders. I'm Ruth's Fetch It Boy, neighbor Doug, and I'm looking to buy myself a new summer home with all this trivia money I'm making. Hey, Ruth, you up for a trek to the Northeast? Because in today's Property Pop Quiz, we are talking about Martha's Vineyard, a beautiful island off the coast of Massachusetts where home prices average $1.6 million. That, Well, that's actually news to me. I'm going to have to double check my budget. Well, anyway, this locale, which has nothing to do with Martha Stewart, was actually a large and prosperous whaling industry back in the 19th century, making locals say, I'm going to need a bigger boat. But it really became famous when on today's date, back in 1975, Steven Spielberg debuted a new movie filmed on this island. What was the name of this record-breaking smash hit film that put Martha's Vineyard on the map? I'll be right back with the answer after this, but first, I want to maybe start with a summer campsite and a kayak to make sure I really like it out there before I splash out the big cash. It's a prudent thing to do, right?
Have you struggled with an insurance company that doesn't understand the challenges of being a landlord? And also, did you know that traditional homeowners insurance will not protect you in the event of a claim if you're renting out your house to tenants? That's why we've partnered with America's best-rated landlord insurance provider, Steadily. Steadily offers you the most comprehensive and hand-picked insurance. Their team of experts understands the rental market inside and out, and they know what it takes to safeguard your investments, minimize risk, and maximize your peace of mind. You will sleep easy knowing that you and your investments are protected. Head on over to stackingdeeds.steadilypartner.com and get your insurance quote today.
Hey there, Deeders. I'm new tent owner and full-time summer camper, neighbor Doug. Summer homes and bigger boats are so 2022, am I right? Martha's Vineyard was the island film location of a June 20th, 1975 debut of a movie that was the first to make $100 million. What movie made Martha's Vineyard chummy with tourists? If you said Jaws, then you're correct. The film actually paid local Martha's Vineyard residents $65 a day to run up and down the beach and scream. Heck, I do that for free. I wonder how many takes it took for them to afford one of those homes. Maybe that's where the real money is. I'm on the wrong career path, Ruth. Anyway, let's get back to our real estate lifeguards, Alan Corey and Crystal Hammond.
Thank you, Doug. That was a really great question. And I hear a phone ringing. That means it's time for our last segment of the show. It's Ring Ruth's Rotary. And today we have a call from Samantha. Let's hear it, Samantha.
I only have about $5,000 saved up and I want to buy a home instead of renting. My rent has gone up significantly, so I can't save as much money as I'd like to. Is $5,000 enough? And if not, how much should I prepare to have saved before looking for a home?
Well, thank you for your call, Samantha. This is actually a very good question because I was in a similar situation where when I first moved to DC, my rent kept going up and they weren't even making any improvements. So I'm like, I need to buy a house because why in the heck am I going to keep paying extra and they're not giving me anything extra? And I know I just hopped in because of the whole FHA only 3% down. But Alan, what do you recommend Samantha do?
I always recommend whatever money you have now, find a way to buy a house now because you can't outsave the housing market typically. So if you try to save an extra $5,000 to buy a bigger home, by the time you save up to $10,000, that bigger home is worth $20,000 more. It's an impossible game to chase, even though the market's changing and going up and down with inflation and all sorts of things. It's really hard to save for more to get a better home. So typically, if you do save more, you're buying the same home that you could have bought 2 years ago, 3 years ago. So with $5,000, you can buy a house. What I would start is talk to a mortgage lender and try to look at the FHA loans. They require 3.5% down. There's also, if you're in a rural area or a doctor or a veteran, 100% financing loans. There's a lot of creative programs out there. Contact or Google your city name, down payment assistant programs. And those sort of assistance programs will either pay for your down payment if you're willing to live in, certain parts of town where grants and nonprofits are trying to increase the home ownership population there. I've worked with many clients who didn't have to bring any money down. It was all grants. Now there's strings attached a lot of times for those grants, which I think it's worth it. A lot of those strings are, you can't sell this home within 5 years. Or if you do, you have to give the equity that's been built up back to the nonprofit program. You can't rent it out. You actually have to live in it, because that's the purpose of this money that's been earmarked to create home ownership. So there's programs out there to help people with not even $5,000, with $0 to buy a house. It's just a matter of Googling and finding and timing it, and just be on the lookout. It's not going to be, let's look at every single house we can find on Zillow. It's, okay, I've got to look in a certain neighborhood at a certain price point, and maybe I have to take some educational classes that are free that the nonprofits provide. But if you kind of go down their path, there's a way to home ownership for you, Samantha.
Oh, very great tips. So listen to what Alan says. First of all, you can buy a house with the money you have now. I cannot express the importance of the different programs, because they do. Like, I know Acorn has programs. So definitely get with your mortgage lender. They have, when you Google like your city down payment assistance, like Alan just said, like they have different programs. They're occupation based, they can be zip code based, they can be income based. So definitely start your research, get your Google machines ready for your next adventure, your home ownership adventure.
And one more thing to remember, Crystal, is that banks and mortgage brokers like Jasmine Krnjetin, who's on with us in the car earlier, they're in the business of finding a way to give you money. Like, they cannot be in business if they can't find a way to give everyone a mortgage. Like, they're not trying to put you in a precarious situation. They're trying to make sure that you are secure in home ownership, and they are in the business to find a way. And they can also guide you to these grant programs and agents who work with first-time home buyers and all sorts of stuff. So there's programs out there. It does take a little bit of due diligence and upfront work on your part as a buyer, Samantha, to find the right programs and just align with those to make sure that you can take advantage of it.
And when you go through the mortgage process, like, they are going to make sure you're not buying something that you can't afford also. They're going to vet you and look at everything.
Yeah, they're not in the business of foreclosures for sure. So I think that wraps up our show. Thank you, Samantha, for listening. Thank you, Jasmine Krnjetin, for joining us. I really love the ideas and creativity around buying a second home. It's definitely a privilege. I like to do it with a rental, landlord mind, where the second home is going to provide income for me, not just be two mortgages that I'm carrying as a weekend. So maybe use Airbnb or turn them into long-term rentals. But there's ways to keep buying real estate, and that's what we wanted to teach today. If you've got a question for us, go to stackingdeeds.net/voicemail. We'll be happy to answer it here on Stacking Deeds. So reach out to Crystal and me. Let us know what's on your mind real estate wise.
I agree, Alan. What an amazing show. I loved having Jasmine on again, and also talking about, how to buy our second home. So we're all in this together. So let's do this. So Doug, what should we have learned today?
So what should we have learned today? First, take some advice from our esteemed hosts. Take the time to do the math to buy your second home. The numbers will let you know if the timing and property is right. Second, buying a home with $5,000 is enough if you find the right program for purchasing a home. But the big lesson? Driving through a toll booth in reverse doesn't mean the toll booth pays you. It's actually against the law, and you'll rack up a whole bunch of fines and fees. But you got me covered though, right, Ruth? Hello, Ruth. Thanks to Jasmine Radler and Steve Stewart for their production and audio services. And give Crystal Hammond and Alan Corey a follow online. That's at Condo Crystal and at Real Estate Maxi. See you next week, right here on Stacking Deeds.